first here, Biden's pick for Fed Vice Chair for Supervision calls for congressional action on stablecoins. In an effort to address financial stability risks, Michael Barr, a law professor and former advisory board member of Ripple Labs, who was United States President Joe Biden's pick for Vice Chair for Supervision at the Federal Reserve, called for U.S. lawmakers to regulate stablecoins. During his confirmation hearing before the Senate Banking Committee, Barr commented on the potential benefits and risks of innovative technologies like cryptocurrencies. He said that while there is some potential for economic benefit, there are also significant risks that need to be considered, such as the possibility of runs on stablecoins if there is no regulatory framework in place. With regard to the possibility of the Fed releasing a central bank digital currency, Barr said that this is an issue that needs further study and thought. These comments echo the views of Fed Chair Jerome Powell concerning the need for due diligence. According to Barr, other agencies within the U.S. government are responsible for addressing investor protection around cryptocurrencies. At the same hearing, Jamie Lizarraga and Mark Ueda, who are prospective commissioners for the Securities and Exchange Commission, said that if confirmed, they would serve under Chair Gary Gensler. Barr confirmed that he would not work in any financial services company that potentially has assets under the Federal Reserve's purview for 4 years after his prospective time at the government agency. Trying to get rid of any conflict of interest there. Warren cited the recent market volatility, which included the Terra USD or UST depegging from the dollar, and then attacked unnamed celebrities for endorsing certain crypto projects. The thing that's hard with celebrities endorsing things is I feel like a lot of the time they don't know. They just are like, oh, this is cool, this seems cool. They don't know all of the technicals behind it. They don't know like any of the tokenomics for a project. They just are given what they are given and then go with that. So, I mean, that's why you should always do your own research. It's easy to blame somebody else when your investment goes bad. Warren stated that regular investors in stablecoins and cryptocurrencies don't have the same level of protection as those in other financial markets. Barr has been nominated for Fed Vice Chair for Supervision following the withdrawal of Sarah Bloom Raskin. If approved by the full Senate, Barr would help develop policy recommendations on supervision and regulation for other board members. This includes Governors Michelle Bowman, Christopher Waller, Lisa Cook, and Philip Jefferson, Vice Chair Lael Brainard, and Chair Powell. Since October of 2021, the Vice Chair for Supervision position at the Federal Reserve has been vacant. So once they get a candidate in there, somebody to fill the position, we'll see how that would affect any of this crypto regulation that they've been talking about going forward. Up next here, Swift Capgemini, team up to test using the International Network for CBDC transfers. The Society for Worldwide Interbank Financial Telecommunication, or SWIFT, has announced that it is teaming up with French IT company Capgemini to conduct experiments with cross-border central bank digital currency payments. This is Swift's second research project on CBDCs. In order to facilitate the proof of concept linking multiple CBDC networks, Swift is working with Capgemini. This investigation is important as it has the potential to establish a precedent for how different central bank CBDCs can interact with one another. This potential has not gone unnoticed by major central banks worldwide, who have all begun developing their own digital currencies. As Thomas Zash, I don't know how to pronounce that, Swift Chief Innovation Officer said, with numerous central banks developing their own digital currencies based on different technologies, standards, and protocols, it is critical that they enable connectivity between these disparate systems. According to the company's statement, it is developing a gateway that can intercept, translate, and forward domestic CBDC networks to the Swift platform for onward transmission. The system will use existing Swift standards, authentication models, and infrastructure. This would allow Swift-connected financial institutions in over 200 countries to access CBDCs. In continuing its efforts from last year, Swift has formed a new alliance with American professional services company Accenture. This collaboration has been successful in creating a cross-border transaction between a CBDC network and an RTGS system. If the experiments are successful, it will show that Swift has the ability and technical components to link different networks. Swift's head of innovation, Nick Kerrigan, said that the company is working on a cross-border payment solution for central bank digital currencies. This would help solve a huge technology and industry challenge facing CBDCs and enable central banks to make their own CBDC networks payment ready. Swift processed a staggering 42 million messages per day last year, but transactions on the network can take several days to complete. This leaves Swift vulnerable to being replaced by faster, more efficient systems like Ripple. So, everything that seems to start out takes some time. So hopefully this seems like a really good platform. Hopefully they can speed it up a bit so that they can remain competitive. Many developers foresee CBDCs interacting outside the traditional network, and Ripple is in a prime position to provide the much needed support. So we will see where that goes. More to come on that. We always keep you guys updated when any of the articles that we talk about have developed. There's more news on them. We let you guys know so that you can continue to make your good own decisions. Up next here, Hyperledger Foundation deploys new versions of 3 blockchain tools to enhance the ecosystem. The Hyperledger Foundation has announced that the development and release of 3 roadmap projects, Cactus 1.0, Firefly 1.0, and a preview version of Iroha 2.0's long-term support, or LTS. The Linux Foundation's Hyperledger project supports an ecosystem of 14 distributed ledgers. The deployment of the 3 technological tools is expected to assist consumers and businesses across areas of blockchain, Web3, and decentralized applications. The executive director of the Hyperledger Foundation, Daniela Barbosa, stated that the accomplishments reflect the development momentum across the Hyperledger community, as well as the increasing level of maturity of the enterprise blockchain market. Barbosa believes that enterprise blockchain has been very successful across different industries and that the growing community is expanding the ecosystem even further. She thinks this will result in even more interconnected and interoperable solutions. The Hyperledger Global Forum annual conference will take place on September 12th to the 14th in Dublin, Ireland. This conference will bring together leading developers and participants from the Hyperledger community. Cointelegraph had the opportunity to speak with Hyperledger's director of the ecosystem, Karen Atani, during the Paris Blockchain Week. They discussed the company's aspirations to impact climate change goals, Bitcoin mining use cases, as well as their position on central bank digital currencies. So that is just an update from Hyperledger. As it gets closer to that time frame, that's September 12th to 14th, with that conference, I'm sure we'll hear more about what is new in that community. And up next here, Commonwealth Bank puts crypto trading trial on ice as regulators dither. The Commonwealth Bank of Australia, CBA, has postponed its plans for a second pilot program of crypto trading services and terminated access for those in the first round of testing. CBA's CEO Matt Comyn said in a bank briefing that he is still waiting on regulatory clarity for cryptocurrency. He said that he is working with several regulators to determine the best way to treat cryptocurrency. At this point, the goal is to restart the pilot program, but there are a few remaining hurdles to clear from a regulatory standpoint before they can proceed. Comyn said that the Treasury Department is already reviewing a submission for the program, but he did not share any expected timeline for its completion. Comyn said that last week's wild volatility appeared to support the need for the extended delay in the second crypto pilot program. ASIC objected to the CBA services on the ground that consumer protections were absent. He also said that it is clear that the cryptocurrency market is very volatile, but there is still a lot of interest in it from investors and regulators. Comyn also suggested that the bank was awaiting the result of Saturday's federal election. If a new regime comes into power, it could spell broad changes in the crypto regulatory landscape, which Comyn said would be a focus for the incoming government to think about. Absolutely, I think that that makes a big difference. I mean, the government is so divided. Some are for crypto, some are against. It seems unanimous at this point. They all want to have some more regulation around it. However, what that regulation looks like is largely going to depend on who is in office. Dr. Dimitrios Salampasis, a lecturer on leadership and entrepreneurship at Swinburne University, told The Guardian that CBA may be taking its time in order to avoid reputational damage. Given the recent price crash in the crypto markets due to the collapse of Terra, Dr. Salampasis said that balancing risk, brand equity, and regulatory clarity will be key in order to minimize disruption to CBA's current business model. CBA was the first major bank in Australia to offer crypto services through its mobile app last November. However, the bank has put its plans to roll out the service to all 6.5 million users on hold indefinitely. So hopefully once some of this volatility cools off and they get new people in office, they kind of know where the regulations are going, because they don't want to do all this work and then they have to redo it because regulations change. So it makes sense. Up next here's why bears aim to keep Bitcoin under 29K ahead of Friday's 640 million BTC options expiry. Over the past 9 days, Bitcoin's daily closing price has fluctuated between $28,700 and $31,300. The May 12th collapse of UST, previously the third largest stablecoin by market cap, has impacted investors' confidence, and the path for Bitcoin's price recovery seems unclear after the Nasdaq Composite Stock Market Index plunged 4.7% on May 18th. The disappointing quarterly results from top United States retailers have amplified fears of a recession and sent shares of Target and Walmart plunging. The prospect of an economic slowdown has brought the S&P 500 index to the brink of bear market territory. The recent crypto price drop was costly to leverage buyers' longs, with aggregate liquidations reaching $457 million at derivatives exchanges between May 15th and 18th. The open interest for the May 20th options expiry is $640 million, but the actual figure will be much lower. Bitcoin's recent downturn below $32,000 took buyers by surprise, and only 20% of the call or buy options for May 20th have been placed below that price level. The 0.66 call to put ratio means that there are more put or sell options than call or buy options. However, most of the put sell options will become worthless if Bitcoin goes up to $30,000, which would give the advantage to the bulls. If the price of Bitcoin remains above $29,000, only $160 million worth of these put and sell options will be available. This happens because a right to sell Bitcoin at $30,000 is worthless if BTC trades above that level on expiry. There are three possible scenarios based on the current price action. The number of options contracts available for call or bull and put bear instruments on May 20th will vary depending on the expiry price. The data shows that at lower prices, there are more put options being traded than call options. This indicates that investors are bearish, expecting prices to fall. However, at higher prices, the opposite is true and more call options are being traded. This means that investors are becoming bullish, expecting prices to increase. This crude estimate considers the put options used in bearish bets and the call options exclusively in trades that are either neutral or bullish. However, this oversimplification disregards more complex investment strategies. Bitcoin bears will need to push the price below $29,000 in May in order to secure a $190 million profit. On the other hand, the bull's best case scenario requires pushing the price above $30,000 to minimize the damage. The large number of leveraged long positions liquidated between May 15th and 18th suggests that bulls will have less margin required to drive the price higher. Bears are likely to try to suppress BTC below $29,000 ahead of the May 20th options expiry, which decreases the odds of a short-term price recovery. So there you have that, just a little bit of technical analysis. Again, I'm really curious to know where you guys stand. It seems like the comments are very divided. I want to know where you guys stand on Bitcoin. Are you bullish or bearish? When do you think the price will turn around, and to what level? And last but not least here, Tether launches crypto and blockchain education program in Switzerland. According to Paolo Arduino, it is essential that educational institutions are established to help educate not only traders and investors, but future business owners. The city of Lugano in Switzerland will be hosting a blockchain and cryptocurrency-focused school as part of a partnership between the local government and Tether. In an announcement on Thursday, Tether and Lugano said they would be launching the Plan B Bitcoin Summer School to provide blockchain and crypto education to the masses. The education center is part of Tether's Plan B initiatives with the Swiss city, which have included making Bitcoin, Tether, and LVGA token legal tender in the area. The 2-week program will run in July and feature speakers including Blockstream CEO Adam Back and Tether and Bitfinex Chief Technical Officer Paolo Arduino. Topics will include basic introductions to stablecoins and cryptocurrencies, blockchain analysis, and regulatory policy around digital assets. That is very cool. Here's a tweet out about that. That's something very interesting that I hope other countries will adopt soon. I know once we kind of get a grasp on regulation, maybe that would be more doable. It seems very interesting and it seems like it would do well. A lot of people are interested in crypto and don't necessarily know where to begin. Arduino said that as more people adopt cryptocurrencies, it's important that educational institutions exist to help people understand them. This will not only benefit traders and investors, but also future business owners who want to use cryptocurrencies in their everyday lives. In partnership with Franklin University, Switzerland, and supported by the Università della Svizzera Italiana and FUS's Taylor Institute, the Plan B School initiative is aimed at equipping a new generation of workers with the skills needed in the digital asset space. Other crypto-friendly countries, including El Salvador, where BTC has been accepted as legal tender since September of 2021, have launched similar education centers in an effort to increase adoption. So that's very good to hear. Even in this market, there are people that are still wanting to adopt crypto. I really think this is only just the beginning and that crypto is here to stay. Obviously, do your own research on any project, any company that you're wanting to invest in. We are not financial advisors, just giving you our own opinion and reading you the up-to-date crypto news. So that is all we have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.